Welcome, everyone. Thanks for joining us this weekly jump. Today is July 13th, coming up on the middle of July. And I was gone last week. You sure were. Lots of good stuff happened. I should go out of town more often. But for better or worse for you.
Did you get that suggestion?
I did actually get that suggestion. Multiple people suggested to me. I said I could go on permanent vacation, but
I find that hard to believe.
That would not be a good choice for any of us.
All right, so this is Monday.
GrowthLab jump, and we are this week talking about finishing up the GrowthLab 4, the last of the GrowthLab 4. The GrowthLab 4 are, Dan,
All right,
are 4 areas that companies are challenged with, companies of all sizes are challenged with, that kind of boil them down into these 4 kind of areas. We've been going through them on a weekly basis over the last 4 or 5 weeks. Took a break for some other items. But the first one is cash flow, knowing your cash flow.
Yep.
Second one is knowing where you're making and losing money. Third one is marketing for profit. And the last one is paying employees for performance. That's where we'll focus today.
Yeah, and this isn't just like, this isn't just marketing, right? I mean, at the end of the day, we do structure our engagements around those 4. Obviously, with some customers, we focus on 1 or 2 of them, but overall, when I think in the next couple of weeks, we're going to be bringing in the annual strategic business cycle, right? That sort of really brings in these 4 GrowthLab, the 4 GrowthLab 4. So
yeah,
it is something. It's how we approach our customer engagements. It's how we approach conversations with customers. And as we talk to customers, we hear a lot of, in one form or another, the needs or issues, challenges that customers have they really do boil down to 1 or all of these 4.
And they're often interrelated, as you'll see in our discussion today.
So action items for this week are?
It's the GrowthLab 4, the deep dive into the number 4, understanding how to pay for performance with your employees. The way we've been addressing these is understand, design, implement, measure, and we'll keep that the same for this number 4. We'll dive into that, but really understanding it is really understanding what you want to incentivize employees for. Which employees are you incentivizing for what? A lot of people just think about sales when they think about paying for performance or commissions, right? And it has to, in order for this to really be a part of the company DNA, it really has to go a lot further than just sales, right? Or just marketing. It's got to go into your production staff and into, because then you're not just dealing with volume, but you're dealing with quality, right? The quality of the work product.
But the nice thing about thinking about each of these 4 through the lens of understand, design, how do you implement, and then how do you, ongoing measuring, right? It's a nice sort of clean-cut way of thinking through these 4 issues, right? We all know, like, hey, I feel like I'm making money, but it's not translating into cash. Okay, step back. Let's understand what is cash and what is accrual accounting. Let's step back. Let's understand how information flows and how that ultimately converts into cash. Great. Now let's design systems and processes. Let's sort of take a snapshot of current state, future state. What does that journey look like? That's all in the design phase. And of course, we always tell customers, hey, we're just not consultants. We don't go in and tell you how to do it, what to do. Here's a PowerPoint, walk away, right? We go in and we give you alternatives, we give you options, we think through the current state, future state journey, and then, okay, now what does it take to actually implement that? What's the timeline? What are the costs? What is that implementation roadmap? And then the last piece, and probably, in all 4 of these, at the end of the day, you're trying to retrieve data to make better decisions. And so you need to be able to not just go in and implement another system, right? It's not just a silver bullet, right? But you also need to be able to extract data to, in this case, be able to have those conversations with employees. We expected X, you achieved Y. What's the why? And or you did.
It's those feedback loops.
It's a feedback.
You got to have a feedback loop in order to be able to make those decisions and move forward.
So number 2 for this week is also we want to touch a little bit more around the PPP loan forgiveness application. I also want to touch on the EIDL that did recently open. Well, not recently, but it reopened about 3 weeks ago.
Yep.
We are seeing some observations coming out of that. I was pretty stoked to see one of our customers literally 48 hours later from time of application to receiving the grant advance. That was like 48 hours, right? So things are moving a lot quicker, which is a nice sign. By the way, these are observations in real time. So
Jack, if you have any questions about the EIDL or the PVP, we had a ton of interest 2 weeks ago, and it's been continuing. You can put your comments into the chat. We'll make sure we address those as we wrap this up.
Cool. All right, we just went through all of these.
So focus on the paying employees for performance. This, like we said, these are all kind of they relate, right? Cash, where you're making and losing money, marketing for profit, and then paying for performance. They all kind of interrelate. And to put it simply, employees provide value to you as a business owner, and you provide a paycheck, right? There's a value exchange to any business relationship. Employees, as great as they are employees. You provide them, they provide you value, you provide them value.
The key here, of course, is to affect behavior to achieve not just day-to-day goals, but stretch goals, stretch targets.
And company goals, not just closing off a job, but achieving those financial performance goals, those bigger things that you're looking to do as a business. So it ties into your long range planning, your annual operating plan. And really, you have to know which employees you're incentivizing for what, right? This whole process, especially in this pay for performance, we're big fans when we're working on this with our customers and with ourselves of keeping things as simple as possible. Incentivizing the behavior that you want, whether that's top line, whether that's gross profit, whether that's bottom line, incentivizing the behavior you want, but keeping it as clean and simple as possible. Because if you get complicated, especially in this one, you're digging yourself into a nest that's hard to unravel.
So the total irony, of course, is the simplest compensation structures are, of course, linear compensation structures, right? You're not going to get overachieving performances, right? The input equals the output. And so how do you affect or drive behavior to achieve? Remember, as a business owner, our compensation is not a linear comp structure. It is actually quite the opposite. It is we participate in the risk. I'm not saying employees participate in the risk, but ultimately, if there is a layoff, employees are participating in the risk side. So it's about aligning employee comp structures, bringing it closer to the small business owner comp structure. It's never going to be the same, right? The risks and rewards look very different for obvious reasons, but it doesn't mean you can't bifurcate certain parts of your business so that you are motivating employees to achieve
greater revenue,
rewards, or goals that are not linear. And that's what this, at the end of the day, that's what this is all about. So last week we talked about one of the GrowthLab 4s. I would have to say that pay for performance has always been one of my most exciting ones, because this is the holy grail, right? If you begin to have the understanding your cash and being able to understand where you're making and losing money, you're marketing for profit. Now it's all a question of okay, great. So now that I understand those other three, how do I affect my employees' behavior? Where they're driving value.
Right.
How do I affect that, and therefore, how do I align compensation to achieve those stretch goals?
But let's say you have 3 business lines, and 2 of them are driving most of your revenue, but the third one, it's only 10% of your revenue, but it's your biggest grossing product line. How can you incentivize those that are impacting the sales, the revenue generation, to make that 10% into 50%, so that your bottom line doesn't just jump up linearly, but it'll jump more and more.
And remember,
rapidly.
it doesn't actually have to always be about gross margin. When you think about customer acquisition costs versus LTV, monthly recurring revenue versus transactional revenue, in our business, we actually compensate more for recurring revenue than we would for transactional revenue, because that's revenue that comes in, goes out, and never really comes back.
The recurring revenue is the gift that keeps on giving, right?
And it has greater value in our type of business. So
So we got those are all things about the understanding, right? Like, and it all relates back to some of the other GrowthLab 4 that we've talked about. So once you understand, who you've got, what you want to incentivize them toward, and you try to design next stage, design how do you incentivize them towards that.
But in order to do that, you have to start with, you need a plan. You need an annual operating plan. You need a longer range plan. You need a product development roadmap, a sales and marketing roadmap, right? You need a plan in place, because otherwise you're just incentivizing sort of the blind leading the blind, right? You need to be able to say, okay, if those are my 3-year targets, whether you're a salesperson, a production staff, HR, you need to be able to say, or you need to be able to distill down, here are the set of activities you need to drive to perform in order to achieve X, Y, and Z within the next 2 to 3 years. So,
and that's a communication tool with your employees too, as well, right? Because if you're incentivizing them on gross profit, right, you got to give them confidence that the sales team is able to drive the revenue or drive the volume that they can then manage the quality of to deliver it on their piece of the puzzle, right?
So that's understanding, right? Understanding the importance, understanding the why, understanding a little bit of the how. Now let's talk about design, right? So one of the things I'm going to sort of, we just touched on briefly, was in the design phase of paying for performance, it is so critical to keep this stuff simple. Simple to communicate, simple to track. If you don't have the right data, if you're not, if your GrowthLab number 1 and number 2 are not like to the nth degree, then let's make sure you're not trying to pay people for things that you're not currently able to track to. So keep it simple, and then simple, you'll end up, there's a cost, there's going to be a cost benefit analysis to the implementation, right? So keeping it simple, keeping it something that you can manage to, keeping it something that you can collect, and then ultimately communicate to the team. Because if you can't communicate it, your employees aren't going to trust it.
Yep.
And then the last thing I will say about the design phase of the pay for performance, the first time you screw up and don't pay employees, or there are discrepancies and you haven't delineated exactly what's in, what's out, you have, and all of a sudden you're carving this and you're carving that, your employees are never going to trust you. They're never going to believe in the system. The day you pay that full bonus and you can tie it back to those targets, that is the day that your culture, your company transforms into a pay-for-performance entity.
You get buy-in. I mean, we've seen it in our own business. We've seen it in others. That truly is the day people start believing in it. And I've seen employees at customers react in many different ways. Some, great, totally expected that. Others, just totally discounted that piece, that piece of their compensation. And when they came in the door, it was like it was Christmas time. Great feeling, right? But then they do believe that it's going to happen. They believe that you're going to invest in the revenue side, or whichever side is not their piece of the puzzle, so that they can achieve their goals and do what they do best, which is so great to see.
So ways of designing this, there are company level bonus programs, there are department level programs, there are individual level programs, and we can give many examples. So a good example of an individual level bonus program is your salesperson, right? You're the individual who's in charge of acquiring customers. And that's a very simple sort of calculation, right? It can be a percentage of revenue. It can be so many months of monthly recurring revenue. It could be a balance of like revenue versus gross margin. But remember, when you're designing these systems, it's got to be designed in such a way that the employee feels like they have control. If they feel like they're not contributing directly to that KPI, that goal that you have, you're going to lose them, because they're going to throw their hands in the air and they're going to say, it's out of my control. So then what? Now you're no better off, right? So keeping it simple, critical.
Yeah, you start on that.
One more thing, keeping it simple and keeping it so that it is that each employee has a control over that
the thing that you're asking them to influence,
right?
And to kind of keep that kind of going down where you're going, you got the individual, like the salesperson, you got your department level performance, whether that's, kind of a within your P&L, you've got some departmental P&Ls. If you're service-based business, you've got 3 or 4 or 5 different lines of business. Could be within that, and you have a manager for each. The manager is responsible for some of the top line, some of the gross profit, and giving them goals that it could be either or both and both. You have to hit this revenue and this gross profit. That example of a department level, and then company level, across the whole organization. Whether it's revenue goals, gross profit goals, net income goals, or anything in the middle. Putting those onto people's compensation plans gets them focused on making sure that the entire company is running well and smoothly. So you got to think about what each employee that you're trying to put on a performance plan is able to influence and able to help direct others in the company to achieve.
Yeah, so I'm not a really big fan of like, okay, you need to achieve these 3 subjective goals in order to hit your bonus. I feel like
so those are like personal goals, right? Like
personal goals, like you need to influence X, Y, and Z, or you need to mentor, develop. I'm not a big fan of those. I really feel like if it's subjective, then it's really part of the job, description.
We encourage customers away from that. You can include them into kind of the letters potentially. Here's what we'd like you to focus on: personal goals. But in the end of the day, yeah, you're probably, if you hit your financial goals, you're probably not going to dock them if they haven't done X, Y, or Z. But you can get your production staff to influence, be a little more efficient on this customer, or hey, you've been spending a little too much time on this. I need to pull back a little bit, or else we have to go back to the revenue guys and say we need to adjust the price. And that's the kind of the behavior that you want your production staff to really have.
Yeah, and the last thing I'll say, we end up on this topic, we end up talking more on the design phase, because there's so many ways to skin this cat. And there are so many ways to overcomplicate it. There are so many types of metrics and goals you can kind of come up with. The design phase is so important here, because again, keeping it simple, keeping it cost effective to track, and then overall, ultimately being able to communicate that without creating sort of another department around compensation.
A whole data department.
A whole data department. We don't want to do that. And so when we're talking about the design phase, I like to be able to link pay for performance to financial performance. And one of the biggest reasons is that financial performance is something that is ingrained in 99% of all companies out there. Granted, we go back to GrowthLab number 1 and number 2. Not all companies are really tracking, to that level of detail all the time, or being able to segregate all of that data. But at least it's in there, right? I look at QuickBooks, I can see my revenue. Revenue's revenue. Yes, is revenue recognition. Yes, is revenue that, cash revenue, accrued revenue. But at the end of the day, revenue's revenue.
Yeah.
Cash is cash. And it's so much easier to say, hey, Steve, you're going to make $100,000 in salary, but if we achieve a 25% growth in revenue and plus a 10% growth in cash, you will receive a 25% bonus.
Right.
There's nothing more value creating than that, guys. Right? It's simple, easy to communicate. I look at 2 things at the end of the year, and I say, here's what your letter says. Boom. Here's your 25%, $25,000.
A good thing to look at when you're in the design phase is how are you going to measure this? How are you going to communicate it to your employees, which is what you were talking about, like going back to QuickBooks, right? If QuickBooks is not, or your general ledger is not set up to be able to quickly generate reports, you are going to become a data department, right? Yeah. So a good way to go about this is to kind of jump down to measure. How are you going to measure and communicate this to employees? Because if you can't measure it to yourself, you're never going to be able to, I use the word convince your employees that the data is correct, and they're always going to second guess whether you're trying to pull the wool over their eyes.
But I think the most important thing under measure, because ultimately you have to be able to measure in order to pay. I think it's that first bullet, giving employees visibility, right? It's once a month, once a quarter. Remember, you're a $10 million company, and there are competitive pressures. You're in the service-based industry. Yeah, maybe you're not going to be going around to all 100 employees saying we just achieved $10 million in revenue. you may not want that information out there, but there are other ways of communicating that. For example, our goal was to grow revenue. Bless you. Our goal was to grow revenue by 25%. And then you put a bar graph together January through December, and you're in the middle of, say, October, and you're showing 9 months worth of growth. You can show that in a relatively speaking, without talking dollars.
Right.
So yeah, the measuring is important, but it's your ability to communicate regularly.
Right, and that regularity and that cadence of reporting out just goes back to, it's got to be simple, or otherwise you will become a data department. And so, we've seen customers there, and it's not fun. So kind of the middle phase there, the implementation of this all, once you've designed it, implementation speaks for itself to a degree. If you are looking at different different departments, knowing where you're making and losing money, GrowthLab GrowthLab 4, number 2, you might want to redesign your chart of accounts, or you might want to adjust something so that you can put out reports on a better basis, so a more frequent basis. So that implementation process, ties in with number 2 of the GrowthLab 4.
So I would make the argument that should be contemplated during the design phase. You need to understand the current state of your systems and processes. And if there's a path to a future state to be able to get that level of detail coming out of your general ledger, great. Then you go back to the drawing board and redesign it, which is essentially going back to GrowthLab 1 and 2. If it's not cost effective to go in and rejig your chart of accounts, reconnect disparate systems and all that, now it's like, okay, understand what are my constraints, and let's just work within these constraints, because I do believe that the number one thing in the implementation, and number 2 thing, the number one thing is communicating to your employees. So that last bullet point is, what are your key employees? What do they do that delivers value, that drives whatever KPI your goal you're focused on? Identify those employees, start with them.
They're the ones that are going to have the most outsized influence on your metrics. They're also the ones that are the kind of your beta program, right? You don't have to go throughout the entire organization on year 1, right? We recommend starting with those key employees, get them a check at the end of the year, or in the beginning of the next year, once your books are closed, get them to have that moment of like, wow, like this is for real. And they're going to, whether it's formal or informal, they're going to kind of have an effect on others in the organization. The next year, you spread the net a little bit wider, kind of the next level of employee, and hopefully, you can keep going until it doesn't make sense to go further through your organization.
And then on that note, sort of in step 1 is, you don't have to boil the ocean, right? Yeah. You don't have to go after 100% of your employees. Find those key employees. Now, step 2 in that initial phase is stick with the constraints that you're living in. Don't go out and try to recreate your chart of accounts. Don't try to recreate your accounting systems. Stick to what you have. Work within those constraints. You can always improve later on. Try to take, okay, here are the constraints of my systems. Here are the key employees and what value they're driving. Here's the behavior. And here are the targets. These targets are directly linked to these 3 or 4 chart of accounts in my general ledger. Start there, number 2. Number 3, you can templatize the letters, get yourself a nice little spreadsheet. We're not fans of spreadsheets, but again, you're starting off, get yourself a spreadsheet, put your 10 or 15 employee names that are on there, how much they're making every year, what are the 2 or 3 goals that each of them have to achieve. And better yet, if you go to more of a company level pay for performance plan, then really all you're doing is tracking one level of goals, and then the idiosyncrasies of those employees, how much each of them are making, what are their bonus programs. We're big fans of like going back to the annual operating plan in the future. You got yourself an annual operating plan, right? You got your targets, you got your goals, and now you're aligning everybody's efforts, resources to that annual operating plan. And that thing just gets naturally updated every month, and your actuals to budgets, and you're able to communicate. So
yeah, and not to complicate things, but you've got your plan. That is your plan. That is your target for the year. A lot of companies will have stretch goals. So it's like, here's my plan, but if I achieve a stretch revenue, gross profit, I'm going to not give my employees a linear 1x a percentage of that growth.
Give me a
If they
kicker.
hit that, stretch, they're going to get 1.2, 1.5x their bonus. And similarly, if we don't hit plan, we have some customers
chop it in half.
that will not just go to 0, but they'll have a window where they'll chop it in half. And below that, there is no bonus, but it gives people a range, and it gives you that ability to not just have it's an on-off switch, but I can still write that check at the end of the year, especially that first year. We didn't meet our plan, but I'm going to give you half your bonus because we didn't fall below a baseline of 2 kind of bookends.
So in August, we're going to start the annual strategic business planning process. Pretty much every month there's an output. There's expectations coming out of strategy and finance and accounting every month. This is where all of this stuff kind of comes together. People, processes, systems, capital, etc. So
keep coming back to the GrowthLab jump for more of that.
We could spend all day on pay for performance. Good. And on that note, let's spend a little bit of time on PPP loan forgiveness applications and EIDL. Anybody that has any questions, feel free to post them in the chat room. I know it is the middle of July and it is 4:30 on a Monday. Everybody's toast after a beautiful weekend. Let's talk PPP loan forgiveness.
Yeah, kind of high level, just for anybody that's kind of looking at this for maybe the first time. Where does the forgiveness application stand today? We had the PPP, the CARES Act, then we had the PPP Flex Act, all together. End of the day, you still have a few kind of strategic questions to answer and or decisions to make regarding your PPP loan. It's just been extended, the actual application for getting a PPP loan has been extended to August 8th. So if you haven't gotten your PPP loan, you still can get one. Once you're ready to ask for forgiveness on that loan, we now have the actual application for a few weeks. There's 2 applications. So one of the decisions to make is, can I use the easy application or do I need the long form application? And then understanding those worksheets and all the details behind them. We talked 2 weeks ago, about 3 weeks ago, about the kind of the key drivers of the forgiveness application. One is obviously your payroll costs. 2 is now you have an 8-week or a 24-week covered period, and then the third one is really your quotient, your FTE quotient. And basically, if you have reduced your employee count or your salaries, you're going to get a hit to your forgivability.
But it's not employee count, it's employee head count.
Employee head count. And like hours that they worked. But with the much longer time frame, 24 weeks, you can now have a much bigger kind of pie. So even if it's cut in half, you can still cover and get forgiven for the full amount. But that's kind of a quick overview of some of the key pieces on the forgiveness side. And we have a landing page to help you figure out which application can be used and help you calculate your forgiveness.
Yep. So that page is at mygrowthlab.com/loan-forgiveness. And the other one around the easy form is mygrowthlab.com/easy-forgiveness-form. But with that said, what are some of the pain points you're seeing in conversations with customers? And I'm kind of throwing this out of the hitting you out of the blue here because you've been on vacation. So I'm going to start. I'll answer and then you jump in. The tax impact and recognizing when is that tax impact. What we're seeing is in many service-based businesses that rightfully so applied, received the PPP loan, expected a 25 to 50% decrease in top line. In March, did see a 10 to 15% drop year over year, period over period. It was there, it was evident. They got the PPP loan. However, revenue stabilized. It didn't come like plowing back. Like there aren't that many companies out there that their revenue like came plowing back year over year, but it stabilized. Those companies, and by the way, we were preaching this like 3 months ago. stabilized. Those companies were able to right-size their operations.
Mhm.
They received an infusion of capital. They did not go out and spend like drunken sailors. They did not go out and start giving, bringing everybody back. They did not go out and start giving out bonuses and pay raises. They were being prudent, and to their benefit, PPP Flex gave 24 weeks versus the original 8. And because they're in a service-based business, they were able to like lay off maybe part-timers, consolidate work at the full-time level. Ultimately, the headcount is going to come out pretty much level set to where they started. Ultimately, they are going to get 100% of it forgiven. Now what? Now it's this question of revenue stabilized. My net operating profit is not going to be too bad. I'm actually going to turn a profit.
Mm-hmm.
And to boot, I got this PPP loan that's going to convert into a grant. Holy crap. Now what?
And that grant will be income on your
It's going to
P&L.
be income.
And the timing of that,
what's that timing?
of that recognition is going to be when it is forgiven, right? It is on your books as a loan until it is forgiven. And when it is forgiven, it will hit your P&L. And therefore, in this example, if you have stabilized your revenue and let's say your net income is going to be lower than it would have been, but it's still positive, the amount of your forgiveness is going to make that go, let's just say from 50,000, let's say you got a $250,000 PPP loan. So you're going to go from 50,000 of profit in there to 300,000 of profit. And you're going to be, if you're a pass-through entity, the owners of that business are going to be taxed for that 300,000.
And to boot, we're halfway through July. So how you invest in your company is the timing and how you invest in your company is going to be critical. Do you go on a hiring binge today to do some geographic expansion, some service-based expansion, maybe just expanding on functions that you've been holding back on? When do you do it? What is the timing of those hires? Is it this year? Is it next year?
I think you were just having a conversation
This is
with
critical right now.
somebody that just a prospect this morning.
I must have had 10 conversations already in the last month, even with customers, but yeah, this one in particular out in California. I said, this is a perfect example. Companies like ours, I said, we're very similar. We're not out there hiring, or we're not out there like buying CapEx. It's not about machinery. I'm not amortizing stuff on my balance sheet, guys. Every dollar I spend, 99% pushes through right through the P&L.
Right.
Now is the time you need to pause and think these things through, because this is a gift for many companies, and how you use that capital.
And when you ask for forgiveness.
And when you ask for forgiveness,
key questions.
all of these things. And never mind the easy versus long, safe harbor. At the end of the day, many of these companies are going to be all right. It's just, what is the timing and the use of that liquidity? So anyways, I'm going to get off of that. And
I think the other thing that people just are asking us about is the complexity of the calculations to get to that one pager on the PPP loan forgiveness application.
Total like.
I mean, it's very basic, but it's also just like, I talked to a guy 2 weeks ago, and he's like, I'd rather just sell and not worry about this, but I'm looking at all these numbers, and I can't, for the life, it's all my payroll, it's all that, but I need someone to help me organize it.
Well, the average entrepreneur doesn't want to get into all that.
No, it's more valuable for them to sell another.
If I wasn't in this business, I'd be outsourcing that process too. So let's jump to the EIDL, because that is another piece of good news that's come out lately. Recently, back in June 15th-ish, obviously, the EIDL kind of SBA started sort of reopened up the process. Initially, it was for just agricultural businesses, and then they opened it up for small, medium-sized businesses of all sorts. And you could only do it vis-a-vis actually a phone call to the SBA. And now you can do it online.
And the EIDL, the Economic Impact Disaster Loan Program of the SBA, which was in existence prior to COVID. The CARES Act said that COVID is a qualified economic impact, and you can apply for it if you've been hit by influenced by coronavirus. So just go back to the original there.
Cool. So to go back, you can actually go back on the website and you can apply. And we just had a customer recently apply, and within like 48 hours, the advance grant was landed in their bank account. And I believe in the next week or two, the next few days, I'm expecting the loan application to be approved, the process. And it's moving a lot quicker because originally back in, call it March 15th-ish, when the EIDL first became available, it was taking like 3 weeks just to get the grant.
Even longer than that.
And even longer.
Because the people were,
So,
the SBA was just backed up. Now they've got this down to more of a process.
So this is great news.
It is a good opportunity. It's quick, clear, and solid opportunity.
Cool. On that note,
it's a wrap, Dan.
All right, cool. Nice job.